Good day, class. Today we are going to be looking at the topic of budgets. Now I am going to be working out the question that is in the handout on Moodle. It has the solution there already, but I'm going to go through the working so that you can understand how we came up with the answers. Okay? Now, first and foremost, you are supposed to read the entire question to get a feel for what the question is asking. So I am going to go through the question, not the entire question. I am going to read just the top part of the question so that we can save time and begin working on the solution. So you are a small business entrepreneur who has just approached Bank of St. Lucia with a request for a $30,000 90-day loan. The purpose of the loan is to assist your business in acquiring inventories to support peak Christmas sales. The loan officer has asked you for a cash budget to help determine whether the loan should be made. So you are given all the relevant data so that you can answer this question. So the first thing that I am going to look at is the working. Most times when you are asked to prepare a cash budget class, you must always do your working, and two schedules that should be prepared before you do the cash budget is the schedule of budgeted cash collections and the schedule of budgeted cash disbursements. This is because these two areas usually have a lot of working, and it would be easier to do the working for them first so that you can carry on to the cash budget. So first of all, we are going to look at sales. We are going to look at the information that pertains to sales. Okay? So I have prepared a little schedule here for my working. This is not the schedule of cash collections, but it is my working towards that. Okay, if we look at notes B and C, they deal with sales. It says that accounts receivable on December 1st will total 151,500, of which 141,000 will be collected during December and 7,200 will be collected during January. The remainder will be uncollectible. Okay, so I am going to do the working so that when I get to the schedule, I won't have much work to do. Okay, so I have first and foremost that December 1st, there is a balance brought down in accounts receivable. Always look out for a balance brought down. So that must have been from November sales. So I am going to write here, accounts receivable. You could put December 1st or November. I will put November to make it easier to distinguish between them. So accounts receivable November, the amount is 151,500. Okay, so we are told that you would receive 141,000 in December. I am putting this under the 75% because if this is November sales, the 20% would have been collected in November. So 141,000 collected in December and 7,200 collected the month following. We are told that the remainder is deemed uncollectible. So if you add these two, you will realize it comes up to 148,200 when the original amount is 151,500. The difference is uncollectible. The difference is 3,300. It's uncollectible. So meaning this may be a bad debt, this may be, provision for bad debts thereabout. Okay, so we have dealt with the balance brought forward. Let us deal with the sales figures now. In December, I have December sales. December sales is expected to amount to 200,000. We are told that 20% is collected in the same month. So 20% of 200,000 is 40,000. 75% of 200,000 is 150,000, and 4% of 200,000 is 8%. So 20% in the month of sales, 75% in the month following, and 4% in the month following, the 2 months following. So if you add the three collectible amounts, it will amount to $198,000 when the sales figure is 200,000. So that means 2,000, the remainder, is uncollectible. So let's do this again for January. Let's see if we can get the gist of this. January sales amounted to 300,000. I have it here. 20% will be collected in the month of the sale, which is January. So 20% is 60,000. right? So 75% of 300,000 is collected in the month following. That amounts to 225,000. 4% is collected second month following. 4% of 300,000 is 12,000. Okay, we have broken down what is collected when. If you add the three collections, it gives you a total of, what's the total again? If you add these two collections, let me just add it, 60,000, three collections, sorry, plus 225, plus 12, right, it's 297. 297 from 300 leaves us with an uncollectible of 3,000. Okay, so let us do now February sales. Right, February sales amounted to 250,000. So 20% of 250 is 50,000 in the month of sale. 75%, 187,500 the month following, and 4% the second month is 10,000. Okay, let's add that quickly. The collection figure. This is 247,500. The difference, which is uncollectible, is 2,500. So this is my working, so that when I get to the schedule, I simply have to put them in place. Okay? So let us now get to the schedule of budgeted cash collections to add in these workings. So welcome back to the schedule of budgeted cash collections. After our working, I shall explain. Accounts receivable, we are told that from the December 1st accounts receivable, 141,000 would be collected in December. So under the December column, we put the 141,000. And 7,200 collected the month after in January. So we put under January 7,200. Note our schedule of budgeted cash collections is for December, January, and February. And I have a total column. The December sales. If we look at our working, we realize that 40,000 was collected in the month of sale. It's December sale, so the month of sale is December. 75% in the month after. The month after December is January, so 75%, 150,000. And 4% in the month following. So that is the second month after the month of sale is February, 8,000. Note I have also totaled across 141,000 plus 7,200 is 148,200. 40,000 plus 150 plus 8,000 is 198,000. So we go to the January sales. Because it is January sales, you will have nothing coming in December. However, the 20% in the month of sale is January, is 60,000, it comes here. And 75% in the month following the month of sale is 225,000. Note that the 4% in the second month following will not be shown in this schedule because that would be March. Our schedule only allows for December to February. Okay? The next one is the February sales. It is February. Hence, there will be no collection in December and no collection in January. So the 20% in the month of sale, which is 50,000, comes under our February. Note that the 75% in the month following, which would be March, and the 4% in the second month, which would be April, is not shown because our schedule asks to show just for these 3 months. I have totaled across, and we see here the total collection for December. So in December alone, we collected 181,000. In January alone, going down, we collected $217,200. In February alone, we collected $283,000. And the total collection for that period is $681,200. So this is our schedule of budgeted cash collections. If you have any questions, you are free to put in your questions in the discussion groups on Moodle. Let us now look at our schedule of budgeted cash disbursements.